Hello, subscribers and everybody following me. My name is Francesco Sani. I'm a private trader, and I've been looking at this setup for EURUSD, and I'm very pleased to say, you probably see my comments today. I closed on my demo a really large size trade. As you probably remember, I'd done a Fibonacci extension based on this sort of long move from back here in the early 2000s, and essentially extended out to this point, this peak, 2018 summer. And then the third point of that was down at the bottom of that correction in November 18. So this created then the extensions, and my first target was meant to be at 10, my target was meant to be at 10,000, which was kind of halfway between two fib retracements. And I decided today I wanted to close that because of a couple of things. But before we get into that, basically I just wanted to, I've taken that off this screen just because I wanted to show you a little bit my my thoughts behind kind of closing the trade and kind of warning signs that maybe it wasn't going to just carry on its merry way undisturbed, and maybe the correction could be larger. One of the things I noticed today was that there was actually a bit of a jitter, and that sort of on the daily broke through the 50 and then the 100 day moving average. So and so far, for the last 3 days that I've been trading this, it's been above the 50-day moving average. So there's a clear sign of exhaustion there, and I just wanted to be out basically and maybe re-enter later. The concept doesn't have to stay. I mean, I'd taken more than 50% of what was going to be the target. The target was quite long, and it was meant to be something like in the region of, again, demo money, but it was going to be in the region of £55,000. And I started my account equity at that point. When I put on the trade, it was about 1,200,000. So 50,000 is like more than a quarter of that on top. So it's quite a big win. I ended up basically getting more than 20,000. I forget actually. I'm going to check because so the final win was, I put it in the comments there, but if you want to know exactly, it was over 3,000 pips that I got. Each pip was worth more than £9. Yeah, the trade is actually gone now because it's kind of end of day and the data gets cleared from the demo account. But essentially, yeah, I'm up to 226,049. So my whole trade was basically over 26,000. So that's quite large. I was quite happy with that. So then the other thing I started looking at is I've taken a Fibonacci extensions off because I want to show you this other thing on the same chart. If you look at this, I've drawn these kind of lines, and you can see that this steep, what we call the hyperbolic. So the rise, basically, if you look at the monthly close line, it kind of really strips everything to the most essential thing, which is the curve. And you can see that price is basically going up, and it's like a sort of air show where the planes are about to do a corkscrew, and basically it's just almost vertical. And at this point, if you look at the grid, it's basically parallel almost to the grid. The angle must be just off the straight. Now, the duration of that sort of trend bending, so just following that trend further and further up, has kind of been mirrored here. As you can see, the price is really shooting up, and this whole process here of this kind of peak was, between, I'd say, 1 and 2 boxes, which is basically like a year and a half. This is taking about, I'd say maybe a year. So there might be a bit more leg in that, but it's certainly getting close to that point where price is shooting high so hard that it's almost vertical. So that's one thing. I was happy with the money I got, and I was happy with where I was. I put that trade in, and I checked on my FX book kind of metrics, and they said that the trade entry accuracy was something like 93%, and the trade exit accuracy was something like 94%. So that kind of means that, and the risk reward was something like risk 1 and reward 13. So I really did well on that trade. I just didn't want to ruin the perfect trade, basically. So because then after that, we got the ECB rate decision. We've had earnings today from FANGs, so Facebook, Amazon, Apple, Netflix, and Google, Alphabet. And and I'm not sure what the earnings were, but the ECB press conference, etc. There was some jitters. I mean, the euro and the, as I said, EURUSD and the Euro TOY are different beasts. They don't really, never the two shall meet, although they share euro in the name. But today there was this dip, and the euro basically just tanked. It was kind of coming towards below 118 yesterday, and today just went down and down and down, and it dipped, basically just went through 117 into the 16s, and it was pretty amazing that it could do that on, presumably, I'm not sure what was said, but presumably not much has been updated in terms of what the strategy is from the ECB, but I don't know because I wasn't listening. But I think maybe there was a connection between that and what the Euro TOY did, which is kind of to dip, as I said, past the 50-day moving average. Let's have a look at the ATR here. So you can see that from 2018, that massive peak, it's not been as volatile, but it started picking up again on this hyperbolic again. We get into those levels there. So we're talking about an ATR monthly of about it's 5,000 pips, more or less. Or is it 50,000? I think it's 5,000. So that means that we get to these previous levels. If you look at the past history here, these are like all-time highs in terms of volatility for this instrument. So what we're going to do is I'm going to also look at lower time frames, but I'm actually going to add an indicator, and that's going to be RSI, a good old RSI that everybody always goes on about in sort of basic kind of forex trading kind of strategies. But actually RSI has got a dirty name, but it's really good. There's absolutely nothing wrong with using RSI if you use it well and use it kind of in the sort of right context. So here's the monthly chart with the RSI showing as well. I usually have it sort of 80 and 20. Here's down to 70, but there's 80 there. And if you can see, that's that level is about 90 or just above. So when we touched 90 the last time on a monthly RSI, it was this massive peak in summer 2018. The currency crisis was like through the roof, and Turkey was really in dire straits with that. So I would say that we're not quite far off it. We're about 83.40, as you can see. So we're coming close to those levels. We've not quite been there before. We're just above this peak here in March 2014. So we're kind of careering there towards that, and it started to make me think that maybe we're reaching some kind of extreme. And of course, if you look on the daily, we've done RSI overbought to death, and it's not stopped this pair rising. So you have to filter out further and zoom out until you get to a wide enough time frame that the RSI has a really, really extreme reading only once in this sort of past decade plus, which is this 2018 in the kind of 90s. But we are getting there. As I said, we are at 83.40, so we are kind of getting towards 90. Your standard RSI overbought is a 70. I set it to 80. This is kind of at 90. So at some point, we're going to get some kind of extreme reading, and it won't be a coincidence, not because of RSI, but because of just the nature of history repeating itself, is that there's something in the kind of holding assets that are so overbought. Everybody knows they're overbought, and at least at the slightest kind of touch of nervousness of losing that investment, selling until there's somebody to buy off those sell-offs, then great. So essentially I got out for those reasons as well. And if you go down to something like the weekly, you see that from RSI point of view, we're just way off. We're into the 90s. We're like 90 point, we're sort of 91 now. Basically, we are we're there. So I guess we're kind of racing towards 100 now on the weekly. Also on the weekly, you can see the divergence there, starting from that 2018 peak. It's been kind of dropping and dropping, and now it's picking again. Okay, so we're definitely sort of picking up. The ATR is rising, and we are at this level here, 2,257 pips. So, and if we go to the daily, you'll see even more detail. There's a daily there. You can see a bit more divergence here. The price there sort of going up, and we've got this kind of divergence in stages. It's like sort of a series of humps, but there's kind of lower highs. So if I could sort of write that somehow, you can see that these lower highs on the RSI, this is for the ATR on the daily, and it's kind of getting smaller and smaller, and it's almost like there's a wedge. You could almost do like a wedge on an ATR, which is sort of an unusual concept in a way, because it doesn't like but if you think of a breakout of a wedge, or more than a wedge, this is like a triangle, but it's a symmetrical triangle. So both the top and the bottom line are actually sloped, and they're sort of converging. Once they converge, there needs to be a breakout. So either maybe we could say the ATR drops dramatically or it rises dramatically. On the RSI side, we are here, and essentially, so there's price moving up, and the RSI is, let's see, we're actually slightly lower if you look at these humps. If I sort of make a horizontal line here from this high in July, you can see that we're actually lower, and so we've got all these kind of different aspects that make you think, maybe something here is not quite right. And then just to add to that whole thing, if you went to and got the MSCI up for Turkey, which I talked about before, you can see that now for this you only get a few hours because it's only active in the afternoon. So if you put this on a say expanded version, I can get this to move quickly, and you can see that on the daily, on the daily you've got these bars, the volume bars, and I'm just going to put it up to instead of daily, so put it to the hourly actually, hourly. Okay. So as you can see, basically we get the 12:30, 1:30, 2:30, 3:30, and then next day 9:30, 10:30, 11:30. I think I need to expand it a bit more because that's not quite how it is. Here we go. All right, so there's the today. So 29th there, 9:30. 10, 11, 12, 1, 2, 3, and the previous day, so it stops at 3:30, so you get from 9:30 to 3:30, and that's the North American time. I think it's New York time. So 6 hours, and for the UK that's in the afternoon, so you get nothing in the morning to kind of decide on this. But what you can see is kind of an interesting one, is that we've had a massive drop, but today volume is quite low. There was a bit of buying here, but generally not like a trending volume, like say in the case of here on the 26th, where it's kind of trending down, then trending down. So again, bouts of kind of sell volume topped by this big one here yesterday. If I did it daily, just to kind of show you the anatomy of that whole move, you can see that we've had yesterday and the day before and the day before, essentially we've had 5 days of sell volume, okay, and today was more of a buy. All it did is it actually stalled that descent, because you're basically reaching the very bottom of that range. There's not much, there's not really a long way to go there. Now this asset, as I said before, essentially is inversely proportional to Turkish Lira pairs. So when this drops, the Lira is also dropping, but in a currency pair, the Lira is quoted as the quote currency. So essentially price rises for Euro TRY, USD TRY, etc. TRY JPY is quoted with TRY first, so then you can see the Lira kind of as it is, as the base currency, dropping in line with this. But so we dropped so much, and I'm starting to think, well, how much more can it drop? I think that's a huge move. So I think I'm quite happy with what I achieved today. So I'm going to stop there and say that interesting currency pair. Keep an eye out on it if you're thinking of trading Lira. Just keep an eye out on these different aspects and see whether it continues higher and where it's going. We are at all-time highs, so it's really hard to have past prices to guide us as to what happens next. It can go further and further high, like stocks might do, but it's really hard. So buying on a dip is good, but you need to be careful and mindful of all these sort of extreme readings that we're getting here, and maybe keep an eye on fundamentals, see what happens. A really good site that I use is News Now, and there's basically a section dedicated to not just the Turkish economy, but actually on the Turkish Lira, dedicated to that. And basically, just to get an article here, for example, that's talking about, this is published today from Bloomberg. It says flashback to 2018 Lira crisis, which is what I go on about every single time I talk about this currency pair, is that it's on course for its worst month since August 2018, and basically there's speculation that the central bank will try an interest rate hike to stem this hemorrhaging. There's your rise here that we're talking about, and so it's a really interesting analysis of that. I use this website a lot, and you get article from Akval and Hurriyet, other sort of Turkish papers, and then also sometimes from Reuters or Bloomberg. So I'd recommend that as well if you want to kind of understand the fundamentals, and also keep an eye out on the what the central bank is doing. All right, that's all from me. Thanks so much for following, and I look forward to your comments as always, and I'll see you in the next video. Good luck trading. Bye.